Hey guys, it is Julie here with JT Wealth. In today's video, we are taking a look at two penny stocks that analysts think have the potential for some huge future growth. So let's get into it. All right, guys, welcome back and thank you so much for being here. Like I said, today we are taking a look at two penny stocks that could rack up triple-digit gains according to analysts. So in today's video, we're going to take a look at what price targets these analysts have for these stocks, as well as a closer look at exactly what they do. And since these are penny stocks, you know it is time for a big old disclosure here. First of all, as you saw, these were highlighted in a TipRanks article that is going to cause the price to jump up. Penny stocks are extremely volatile and can go up as quickly as they can go down. So make sure you always plan your entry and your exit, understand your risk tolerance, and especially your time frame for how long you're willing to ride out some of that volatility. Penny stocks should only be a small portion of a well-diversified portfolio, and never invest more into penny stocks than you're willing to lose. These videos are never a suggestion to buy or sell any specific stock and are just meant to bring some new companies to your attention that you can then go and do further research and due diligence on. So never jump into any investment blindly. Make sure you do your own research and understand your plan for your investment. With that being said, before we jump into these two penny stocks, this is just your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and leave your thoughts in the comments down below. Also, don't forget to check out some of the great links in our description, which includes a link to my favorite resource, TipRanks. Their free plan has a ton of amazing benefits, but the premium and ultimate come with some really great perks. So if you're thinking of signing up, make sure you use that link down below to let them know I sent you. Now, the first company we're taking a closer look at today is Checkpoint Therapeutics. They trade under the ticker CKPT and are currently at around $4.35 per share, which is up about 17% today. And at one point, they were up to nearly $5 per share just after the article came out. As I mentioned before, these penny stocks can fluctuate a lot, so make sure you're keeping an eye on it, not trying to chase any hype, and get an entry price that you are happy and comfortable with. Now I'm going to start right off with the analyst price targets for this stock. And with Checkpoint Therapeutics, we have 3 current analyst ratings. And it comes in as a strong buy, with all 3 ratings being a buy and an average price target of $17.67, which would be nearly a 300% potential upside over the next 12 months. And that is another key point there, guys. These are 1-year price targets. So they're based on catalysts that are expected over the next year, not just in these next few days. Our most recent rating comes at $16 for about a 261% upside, and the highest is a $20 price target from about a month ago, which would be over 350% potential. So let's take a look at what Checkpoint Therapeutics does that has analysts so excited. So they are a company founded by Fortress Biotech and is a clinical stage immuno-oncology biopharmaceutical company focused on the acquisition, development, and commercialization of novel treatments for patients with solid tumor cancers. One of their lead candidates, CK301 or cosibelimab, is a potential best-in-class anti-PD-L1 mAb with twofold mechanism of action. Registration-enabling study in cutaneous squamous cell sarcoma has over 80% enrolled, and they're expecting full top-line results in the second half of 2021 to support marketing approval applications. Their other main drug, CK101, is an oral third-generation irreversible kinase inhibitor against selective EGFR mutations in non-small cell lung cancer. And they are looking at positive phase 1 interim results presented at the 2018 World Lung Conference. So looking at their pipeline, we are coming up on some big catalysts here for the company, with that cosibelimab expected to have those pivotal study full top-line results by the second half of 2021. The current annualized sales among the approved anti-PD-L1 class is $25 billion and is expected to grow to $50 billion. The competition is indication specific, and the entire class priced at about $165,000 per patient per year. They also have a strong IP or intellectual property portfolio. For cosiblumab, their composition of matter patent, which was issued in the US, is expiring no early than 2038. And for their CK101, those patents issued in the US and the EU are expiring no earlier than 2034. They also have $42 million in cash reported as of September 30th for a cash runway into 2022 and no debt. One of the analysts covering this stock was Jennifer Kim from Cantor. She says that we think the risk reward is favorable heading into the full reg-enabling phase 1 readout for cosiblumab in metastatic CSCC in the second half of 2021. We view this as the key near-term focus for CKPT. We expect a positive readout based on what we have viewed as strong interim data that they have recently presented for cosiblumab. She added the potential peak sales opportunity for cosiblumab is underappreciated in our view, and we expect upwards earnings estimate revisions to drive CKPT shares higher. The second penny stock we're taking a closer look at is GLMD Pharmaceuticals. They trade under the ticker GLMD and are currently at $5.36 per share, which is up about 21% right now, but has definitely cooled off a little bit from their initial jump up to nearly $6 this morning. GLMD Pharmaceuticals has 4 analyst ratings, and they all come in with a unanimous buy. And those 4 buy ratings come with an average price target of $19 per share for an upwards potential of 250% over the next year. And those do come from some well-rated analysts, with the most recent rating coming 15 days ago for $10 per share, which would still be an 86% potential upside, and the highest coming from H.C. Wainwright about 3 months ago at $29 per share for about a 441% potential upside. GLMD is leveraging science for lifetime medicine, and they are a clinical stage biotech specializing in liver, metabolic, and inflammatory diseases. They currently have 2 lead assets in development, Aramcol, which is in phase 3 for NASH and fibrosis, and Amilo-5-Mer, phase 1 ready for acute and chronic inflammatory conditions, including IBD. Aramcol has potential to be a backbone therapy for NASH and fibrosis. They've seen positive phase 2b data from their ARREST study, and they're now in a phase 3 ARMOR study open label segment with Aramcol, which is ongoing. And they plan to introduce Aramcol Meglamine into double-blind registration segment of ARMOR by the 4th quarter of 2021. Now, the enrollment for that study was recently temporarily halted. Aramcol Meglamine, an NCE or new chemical entity with extended IP compared to Aramcol, and which the company is switching to, is earmarked to take Aramcol's place in the ongoing phase 3 ARMOR study. In Q2, GLMD expects to sit down with the FDA to discuss substituting Aramcol Meglamine for Aramcol and to file the IND in the first half of 2021. Aramcol's direct antifibrotic mechanism of action, combined with its ability to reduce liver fat, has potential to be that backbone therapy for NASH fibrosis. Aramcol Meglamine is a new salt form of Aramcol with an improved target product profile and a 2035 IP protection. Aramcol Meglamine clinical development plan is designed to create value with low developmental risk based on the phase 2b and the open label safety and efficacy data, and there is significant clinical and regulatory milestones expected in the second half of 2021. One analyst covering the stock is Steven Seedhouse from Raymond James. He says, of course, delaying phase 3 by 1 year in a competitive NASH field is suboptimal, but given all NASH trials are being delayed by the pandemic anyway, we think GLMD made the right decision to transition to Aramcol Meglamine now. At this point, FDA go-ahead remains the most important catalyst in 2021, followed by 24-week open-label data from the first cohort. GLMD has also recently added a new candidate to the pipeline called Amilo-5-Mer, a 5-amino acid peptide that inhibits SAA polymerization and aggregation. The company believes that Amilo-5-Mer could potentially play a role in numerous indications such as inflammatory bowel disease, rheumatoid arthritis, and ronavirus. Preclinical data presented by GLMD show good activity in IBD and RA mouse models. This adds an interesting new value driver for GLMD beyond NASH, which is ongoing. So 2 stocks with some pretty high triple-digit growth potential in their future and catalysts coming in 2021. But that is a major thing there, that none of those catalysts are expected until about the second half of 2021. So this is what I mean when I say understand your price target and timeframes and how long you're willing to hold on to a stock to see one of these catalysts come to fruition. With any biotech or pharma stock, there is a lot of risk involved as these approvals are not guaranteed. So just understand that these are very risky investment choices. Do not invest more than you're willing to lose, and take a good look at where this fits in your overall portfolio. With all that being said, you guys know I love hearing from you, so let me know your thoughts on these 2 penny stocks or what other penny stocks are catching your eye lately. If you made it all the way to the end of today's video, make sure you hit that thumbs up button and make sure you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a fantastic day, and cheers.